Let's talk currencies now with the latest on what is moving Forex. Lachlan Meakin joining us from Go Markets. Lachlan, good to catch up with you again. Thanks for joining us. Let's start with King Dollar. What we're seeing with the US dollar at the moment has bounced back more recently, but obviously it has been under enormous pressure given that questioning of, I guess, of US exceptionalism, but not the least, of course, being what's going on in markets with Trump's tariffs.
Yeah, absolutely, mate. We saw this tariff tantrum earlier in the month with a very big dip in the US dollar. It was overextended. It was bound to bounce. I mean, we've seen the way Trump works with these. The first 100 days, I'm guessing, is the shock and awe part of the tariffs. The next 100, probably the negotiation concession stage. So a bit of optimism's come back to the market. Some of that risk premiums come out. We see the US dollar has bounced. The interesting part is, though, that we've seen equities almost fully retrace, especially tech, whereas the US dollar has lagged. Even though we've seen a bounce, it certainly hasn't retraced that whole move. So it probably has been some damage done into the confidence of the stability of the US dollar. I think that, there's a bit of counterparty risk now, I guess, with the unpredictability of Trump and his tariffs. So I'd expect the US dollar to strengthen a little bit more from here, but certainly going to be some major headwinds as we've seen a fair bit of diversification, I think, out of the safe haven of the US dollar and the euro being obviously a big beneficiary of that recently.
Now, we've got some, of course, we've had key data this week out of the States, certainly with growth numbers, but also further jobs numbers too, in particular tonight's non-farm payrolls. What's the expectation and how do you think that's likely to move the dollar?
Yeah, I think the data this week, we saw a stronger GDP, which can be explained by that kind of front loading to beat the tariffs, the imports. The ADP earlier this week was a bit weak. NFP is looking to be a little bit weak tonight, around that 130,000. I think the consensus between 100 and 160. I think as far as NFP goes, this probably won't be one of the more important ones, just purely because the survey was taken a few weeks ago before really the effects of this Liberation Day policy took effect. But obviously it will be important ahead of the FOMC next week. But I think the May NFP will probably be the one that's reflects more realistically of the damage done, if any, of these tariffs. Tonight's figure is still be important to the point of what we'll hear from Jerome Powell next week. And if it comes in under 100,000, then that's going to put them in a hard place to Fed, because we've got this kind of slowdown in the economy while we've seen a bit of a uptick in inflation. So puts him in a hard place. But if we see a stronger NFP tonight, then I guess he can at least have the fact that the economy's not looking too bad, along with that inflation. But we're certainly getting no cut next week, but it'll all be on the statement how he foresees things going forward, which will push the US dollar from next week onwards, I think.
Elsewhere, Lachlan, the Bank of Japan leaving rates on hold as was expected, but did significantly cut its growth forecast. How's that played out for the yen?
Yeah, the Japanese yen got hammered last night. We saw a very big rally in the dollar-yen pair above that 145. And one thing with the dollar yen too is it's a very technical pair, so you'll see these big levels quite often be very strong support and resistance. We see, if you look at the chart, there was a very big bounce off that 140 level, which we've seen a couple of times in the last few months. 145 is a big level, so we're ahead of that. The comments out of UAIDA, the Bank of Japan, is that the uncertainty of US trade policies is making it difficult to forecast. So I think that yes, they held rates as expected, but that lowering of economic growth going forward, as you mentioned, certainly pressured the yen, along with the US dollar strength that we had last night. And I guess going forward, we really can't. I couldn't see any kind of rate hikes or moves from the Japanese until at least this 90-day pause is finished. So he's really kicked the can down the road, at least until July. So probably see it a little bit higher, the dollar yen pair anyway, I think maybe to 146. But those headwinds against the US dollar that we spoke about before probably will cap the upside somewhat, unless tonight's figure really smashes it from the US, and the FOMC is much more hawkish next week, which is probably unlikely.
Elsewhere, what are you seeing with the euro at the moment?
Yeah, well, Euro's been a mixed bag of data this week. I mean, they had a stronger than expected GDP out of some of the member nations, but that can be explained the same way we had a weaker GDP in the US with that front running of the tariffs. Some of the inflation data was a little bit stronger than we thought, but the music coming from the ECB is very dovish. I don't think this week's CPIs will sway their path. We've got pretty much a rate cut fully priced in for June, even possibly a 50 basis points. But I mean, the euro was a very big beneficiary of Liberation Day tariffs. So you saw it rally very, very strongly, very overextended, pulled back a little bit. I don't think it'll pull back the whole way because the diversification we've seen out of the US dollar will benefit going forward in the medium term. But I would expect a little bit more weakness against US dollar, maybe around 112 we'll find a base. But a couple of pairs to watch with the euro too is, I think the euro Swiss, it's a little bit soft considering some of the risk premium that's come out of equities lately. And euro pound, we've got an interesting meeting in May the 19th, the UK EU reset after Brexit, first time since Brexit. So I think a close integration with the UK with Europe will help the pound, it has in the past. So that euro pound pair too, I think will come under pressure in the next couple of weeks.